Um, so I think in terms of the investment process, maybe we could start with that,
Sure.
right? Um, yeah, so I wanted to build something that was repeatable, right? So it's a mix of fundamental and systematic. So your traditional macro manager usually would, a top-down view. You look at some certain macro indicators like inflation and growth, and you say, okay, I think bonds are going to sell off or bonds are going to go up, and then you put on a trade. For me, that wasn't enough. I just needed a lot of data to back up the ideas, because we're all human and we all have a bias.
Yeah.
Right.
Yeah.
You need to remove that. So for me, the whole thing with this strategy is removing the bias, because that can really take away a lot of alpha unnecessarily.
Mm-hmm. Mm-hmm.
So what we do is we always start with a view, and then we back it up with a lot of data. We look at all the different economic regimes over the past 50 years. We look at how these assets have behaved during these periods, and if that's true, then we put on a trade. Right. So I think it's just, I'm not sure all this data was available 20 years ago. Now it's available, so you might as well use it.
Sure.
Right. Once we put that on, I think we've decided on a trade. Structuring the trade and managing the trade, it's completely automatic. What I wanted to do is build a system where you can trade around a core position.
Yeah.
So, if I bought, just for example, if I bought Apple shares and I bought it at $100,
Sure.
when it goes to $90, I buy a little bit more. And when it goes to $110, I'd sell a little bit,
Sure.
right, to take profit. You keep a core position and you trade around it.
Yeah.
And I mean, actually, that's just buying low and selling high.
Yeah.
Right.
That's true.
And
Yeah.
it sounds easy, but it's really difficult to do.
Yeah.
Because when a share goes from 100 to a 90, you're thinking, oh my God, I just lost $10.
Has the thesis changed?
Has the thesis changed? The narrative is
yeah.
coming. Everyone's telling you, oh, Apple's
Sure.
a bad stock, etc. And then you might sell it, or you might keep it,
Yeah.
and you might just hope it goes back up. And then when it goes to 110, you're giving yourself a pat on the shoulder.
Yeah.
Everyone's telling you it's the greatest trade in the world, and you
Sure.
don't want to take it down, right? So you just need to put that cognitive bias. You need to get rid of it.
Yeah.
And just automating the whole trading, it really helps. So for me, if my model tells me I got to buy here and sell here, I'm going to continue doing that. I'm not going to override it unless I have a really good reason to.
Sure.
And what that does, I feel, and that's one of the big things for the fund, it really reduces your volatility of returns.
Yeah.
Because you're buying low, you're actually increasing exposure at a low level, and you're reducing at a high level. So your drawdowns are lower and your upside's bigger, right? I think that's one thing. And another thing in terms of the investment process is the risk management, right?
Yes.
That goes the next step. And I think what we've done is slightly different. You mentioned something that I mentioned just now, that your strategy has to be robust to regime shift.
Yes.
And that's what our risk management system does. Because when you're in a certain regime, like a low vol regime in 2017,
Yeah.
everything's good, you might lever up because things are great. But if you shift to another regime, that portfolio is going to get destroyed. So what we do is we've studied the correlations across different regimes and how they evolve, and we make sure the portfolio is ready for it, right? And that involves perhaps using options to hedge the portfolio in case you get an event like
Yeah.
we did in Q1 this year.
Yeah.
But it's just being aware of that. Most people think that the correlations and the volatilities you've seen over the last 6 to 12 months are going to last, and the risk management systems are built on that. All right, so that was a big thing for me when I started the fund. If you've managed a correlation book, you've been through a few volatility events. You understand they change very quickly.
Yeah. Yeah.